So we are here now together with Eerik from Planet42.
Hello.
Eerik, so what are you doing at Planet42?
I'm the CEO and co-founder of Planet42. So we founded this company together with my other co-founder Martin Orgna back in 2017 when we moved to South Africa. And I'm still here in Johannesburg. We've expanded also to Mexico. That's where my co-founder spends most of his time. Mm-hmm. And we have our European headquarters in Tallinn, in Estonia. So that's where we have all the data science teams and risk, finance, accounting, so on. But in here, in Johannesburg, this is our largest office right now. I think Grant said 75 people here right now, but we're adding like 10 people a month. So this is where it really all happens right now.
Okay, so most of the people will know your company from Mintos, because you are a loan originator there. So can you briefly describe what Planet42 is doing, that everyone is aware of what you are doing?
Sure. So Planet42 rents cars out to people who are unfairly ignored by banks. Mm-hmm. So I think maybe helpful to see is like my background was in Mogo. So I used to work as the managing director of Mogo Estonia, or really? Country manager there. Okay. Until my co-founder Martin convinced me to quit that job and come to South Africa, because we saw that, or he saw, there's a huge market opportunity where just like banks are only serving not more than the top 20% of people. So, everyday people like teachers, telecom workers, police officers, and so on, they have stable salaries, but they can't get access to vehicle finance. Mm-hmm. So these type of people would get cars in Europe, but not in South Africa or other emerging markets. So that's why we came here. So we are buying second-hand cars mostly from car dealerships, and we're renting them out to our end customers on a monthly basis. Mm-hmm.
And you are going also in other countries. I heard Mexico.
Yes.
You will also offer these loans on Mintos?
It's a bit early to say about that. So yeah, if the Mexican entity will also go on Mintos, we're just getting started there. We have almost 100 cars on the roads there right now. But in South Africa, we have already bought more than 10,000 cars. So it's a couple of orders of magnitude larger. In South Africa, it's an established business. It is a cash flow positive business. So it made sense for us to launch on Mintos with the South African entity. Mm.
Can you explain why you have chosen Mintos as a funding source? I mean, there are other marketplaces. We have in Europe Bondstar, we have Incomes also from Tallinn, and some others. Why you have chosen Mintos?
I think the easy answer there is just everything else is smaller, pretty much.
So you need the volume from Mintos?
Yes, we need, because again, it's like Mintos is an important partner for us. Like as the loans are, so there's secured loans that we're taking from Mintos, and so that means that the Mintos is part of this. When Mintos investors are part of this intercreditor agreements, they're sharing the securities. Even though we have specific cars are securities for Mintos investors, then that's in a bigger overall SPV structure, which needs like a lot of paperwork to agree. So we can't have like 10 different investors there. So it's difficult to, it's very complex to set up these structures. So you want to make sure you actually get significant volumes. So Mintos is just the largest, it's the most established. I have a good experience with Mintos from my previous career. So Mogo Estonia actually was the very first loan originator on Mintos.
So I guess you have also some connections between.
Yes.
And so on.
No, absolutely. Yeah. So we did the first tests. That was I think in 2015 or something like that. And then once when we founded Planet42, we've been in touch with Mintos from the very first day. So they were just keeping an eye on us for long time, and then we kept kind of talking, negotiating, seeing when is the right moment to start cooperation. And we finally got it done in just before the war in Russia. I mean, the Russian war in Ukraine. So timing wasn't great. But yeah, we see now, like with this new note structure and everything as well, like we should be going over to that structure as well in a couple of weeks. So we're hoping to see like volumes increasing there as well.
Speaking about the security, what is do you have? What do you offer for security for the investors? So what would happen if Planet42 goes bankrupt? Because there are a lot of problems with other loan originators. Yeah. So most of the investors are already harmed from other defaults. So what would happen in case of Planet42 if you?
Yeah, I'm also harmed. I have been.
So you're also an investor.
Yeah, since the very beginning. Okay. So even before we put Mogo on the Mintos platform, I was already there, because remember Mintos in the beginning had these mortgage-backed loans basically that they were doing themselves. Anyway, so when or if, sorry, not when.
Hopefully not.
If Planet42 is unable to pay Mintos investors, then this complicated, like this SPV structure, intercredit agreement, this thing kicks into gear. So basically what happens is that there's these specific cars that are backing the claims of Mintos investors. There's an SPV agent, so the cars that, or the contracts that default, they will liquidate the cars, and the ones that don't, keep getting the contracts that are still active, and they keep getting payments. Those payments are then by the SPV manager directed to Mintos. So basically, they take over our managing of the book. Yeah.
Okay. So you said you are also investor on Mintos. So what is your experience as an investor? Would be really interesting. So how much of your portfolio is in recovery? So how much defaults you already had? So
very small parts in recovery, because I have been, I think, relatively conservative. So most of my investments have been and still like well up to, until like we launched now in Mintos, and obviously I'm investing into Planet42 as well. But most of the capital I had deployed was in Mogo.
Okay.
So and then Mogo again, I think it's one of the best originators there. I like the extra like security that the cars give. So yeah, I had done some other like experiments with like some payday lenders and so on, and of course got burnt there.
So you're
but in general, my Mintos portfolios performed really well.
So you're not using these automated strategies Mintos has to offer. So you pick your loan originators by yourself because you have the experience and know probably which one is good and which one not.
Yeah. So basically, the way that I'm investing on Mintos is that I've just chosen like I think there's like 10 or maybe 12 loan originators that I trust, and then the auto investor is just investing into those. So I'm not using the fully automated strategies now.
Okay. Yeah. So I'm also going away from this strategy to diversify overall, because I also lost a lot of money there. So I'm also picking right now 10 to 15 loan originators. Yeah, Planet42 is one of them. So.
Nice. We can compare later and log in.
Oh, better not. So I have a worse portfolio right now. So let's come to the funding again. How much of the funding is coming from Mintos right now?
Right now it's about 15% of balance sheet. Yeah, 15. We want to obviously increase it, but I think it's just helpful just to look at our kind of like this capital mix. Is that we have three main ways to finance ourselves. Obviously, like equity finance, and then two types of debt basically. So we have secured debt and unsecured subordinated debt. Mintos is part of the secured debt pile there. Currently we have two debt investors there, so Mintos and Lendable, which is a US-based debt fund that was our first institutional investor. So and then there's like this intercreditor agreement between Lendable and Mintos, and now we're adding another large facility there. So Lendable was a $20 million facility, so now the next facility that we're adding is $75 million. We haven't announced this yet. Once we've signed the documents and money's on the account, and we will do so. But then there's this $75 million facility That's the largest that we've raised so far, and obviously we're hoping to match that as much as possible with Mintos investors as well. But so that's the secured debt, kind of the layer, and then we have unsecured debt or subordinated, which is basically just we borrow money from mainly high net worth individuals, some companies who have extra cash and so on. That is basically completely unsecured. It's most like a promise to pay. Obviously higher interest, but also there's no security there. So those are the equity, subordinated debt, and secured debt. Those are the three ways we finance ourselves.
Okay, so that means Mintos isn't that important in the end. If you compare all your funding sources, is Mintos a very expensive funding source compared to others? So will you increase it in the future or more decrease it?
No, we want to increase. So Mintos is like, if you look at just the interest rate cost, basically, it's more expensive. But the very important point is that Mintos is flexible. So there's
so you can decide from month to month how much.
Day to day, really, even, right? So basically, if these guys here like issue a contract today, then we can put that on the Mintos platform, tomorrow, and then we could theoretically have money for it already like next week or something like that. So it's very good cash flow matching. So there's no like cash drag. If you imagine like if we raise a bond, let's say like whatever 20 million euros or something, then that 20 million euros lands on our bank account, and it will take us a while, a couple months to get to use all of that money to buy cars. So there's money on our bank accounts that we have to pay interest for, but we can't earn anything on it because we haven't deployed it yet.
Yeah.
So there's this cash drag there, which is an extra cost for us. So that's why like Mintos is much more flexible. It has its place in the financing mix. Right now it's 15% of our balance sheet. We want to increase that further, but we definitely don't want to go to like, I don't know, like 80-90% Mintos or something like that. That would be too high.
That would be too high, definitely. So you recently made some big cashback campaign. I think it was the most attractive one I saw on Mintos so far. So how can you afford those cashback numbers?
Because we have also margins, really. Like so. It's one of the beauties of this on emerging markets. You can operate. So again, I mentioned that most of, like our customers, if you would bring them to Europe, they would get bank financing for a car. But in here, like only the top 20% of people get proper bank financing. So there's just like really less competition. We can charge premiums, higher premiums on our service. So the cash flow that we get from our customers is sufficient to also borrow money at a very high rate. So let's say, roughly speaking, if you look at an annualized yield on the portfolio, it's around 60% for us. So 60%. So paying 15% interest from that, it makes sense, because we borrow money at 15% and then we earn it back at 60%. So there's a lot of margin there. There's even room for from the one side even to pay more interest, and from the other side to see the portfolio worsening significantly, we will still be fine. We're again, the cash is king. So we're generating a lot of cash, which is given the confidence of just not only like Mintos to take us on their platform, but also to like these other investors like Lendable. There's a $20 million facility, and this new investor is coming on board with a $75 million facility, and we keep increasing these debt financing amounts for us.
Did I understand it correctly? So you pay interest around 60%, and the borrower is paying 60%, something like this?
So that's the kind of the portfolio yield. If you look at let's say monthly payments customers make, multiply by that by 12 and divide by the portfolio, right? So there is the product that we're offering is not a loan; it is a rental contract. So it's much more closer to like Avis or Europcar. The difference is that we're not buying like a bunch of cars from car manufacturers. We're buying the cars one by one from car dealerships, and then the customer makes a flat rental payment that is inclusive of well, the rent, but also VAT, comprehensive insurance, GPS tracker, and so on. And it is a flexible contract. So this is what the main thing distinguishing it from a loan is that the customer can return the car to us. Like for example, if they lost their job during COVID, they can just return the car to us, and we're not going to ruin their credit record for the next 5 to 10 years as banks would. Because banks will take the car back, they will sell it at an auction, and then you will have this unpaid principal that is on your credit record, and it basically stops you from using any other credit products in the future, at least for 5 to 10 years. Whereas for us, the customer just returns the car like you would with a rental car. So when we're talking about this yield, it's not like it is a yield on the cars, but it's not the same as a loan. So I can give you the example of like if let's say you buy a car, or like Avis buys a car for I don't know 24,000 euros, right? And then the rental is 1,000 per month, right? So then you can make this mathematical calculation. You go, okay, 1,000 euros a month times 12 months, that's 12,000 euros a year. And now the car costs 24,000 euros. So now I do like 12,000 divided by 24,000, 50% loan. You can do that calculation. But would you really say that Avis borrowed you money at or gave you a loan with 50% interest rate? Not really. Mathematically, you can do the calculation, but it doesn't really make sense in content-wise.
And it's also important to understand, I think, that the customers are not coming to you directly, so they're going to the dealership, and you are working with the dealership, right?
Yeah. So actually, so far, most of the customers have come here through dealerships. So we've signed up more than 800 car dealerships in South Africa. There's more than 3,000 here, but the dealers will submit applications on behalf of customers in our online portal. But we're also now taking in applications from our website. So that's organic traffic there, but also Google ads, Facebook ads, and so on. And the split between the applications, like application sources, is about 50-50. So we're taking about 25,000 applications per month through dealerships, and about 25,000 applications per month from our website. And the website and the team sitting there will process these applications from the website, call the customers, verify their incomes, bank statements, and so on. And then once they're happy, they are sending the customer to one of the dealerships that we cooperate with to pick a car.
And what is the typical customer of Planet42? We spoke beforehand that we have here the super rich people and the super poor people. So where are your customers? Are they between, or are they super poor, or?
Yeah. So this is the emerging middle class, the underbanked. So all of our customers have bank accounts where we can see their salaries. So they're not unbanked, but they're underbanked in a sense that they can't get credit cards or vehicle finance and so on.
Okay, so they have some savings account, but they cannot take a loan, for example.
Yes.
Not possible.
So we can see that they're making a stable income. They have a salary, but the banks won't lend money to them. Like they might be thin file customers, which is not enough credit record, like credit information, or there's been payment issues in the past. Like let's say you didn't pay for your satellite TV thing and so on, and then boom, you're blacklisted for 5 years minimum.
Yeah.
So like in South Africa, it's more than 60%, so way more than half of the adult population is blacklisted. So that's insane. Like
that's crazy,
so our point is that if you're saying that half of your population is blacklisted, then there must be something wrong with how people get blacklisted. Like something wrong with the term. It's not that more than half of your people are somehow unable to sustain a financial obligation.
Is it possible for them to get out of this blacklisting? Or?
Yes. Actually, we've seen now our first customers have been with us for more than 4 years, and we've seen it takes about 18 months of customers who are paying on time to Planet42. We obviously also report this to the credit registry, right?
Okay.
So every time they make a payment on time, that improves their credit score. So
nice.
we've seen we've graduated quite a lot of customers to bank finance. So they're with us for 12 to 24 months. That improves their credit record so much that they can now actually qualify for bank financing. And it's a great outcome for us. We get the car gets bought out from us. It's a profitable deal. But also now we have a customer who's very likely to recommend us to their friends, because we help them to actually get like this graduate into this bank finance, become bankable again.
And so how do you choose your customer? If you say a lot of them are maybe blacklisted, so it's a high risk for you probably?
Yes. So this is where it comes in. Like, so Planet42 is first and foremost a data company. So we live and die by our ability to understand which ones of these customers that banks are ignoring are ignored unfairly. And the way you learn how to make good decisions is that you make a shit ton of bad decisions, but you record all the data points at the time of making the bad decision. So like literally we get like more than 1,000 parameters for every customer when they apply automatically. And then, 6 months, 12 months, 18 months, 24 months later, you can see, okay, like what is the payment discipline like, and which ones of these thousands of data points are actually predictive of that payment discipline. So it is an iterative process. There's no kind of like magic there. The reason why we've gotten so good is that we have bought by now more than 11,000 cars in South Africa.
You're also getting better by year, right? So because of your database and
so
your experience.
Right now we have the 8th version of our scoring algorithm is live, and in July we'll put the 9th version of the algorithm live. So it's constantly you iterate, make it better, and so on.
I think it's a similar model Bondora in Tallinn is also working with, right? So they have a huge database for the last 11 or 12 years or longer. So they are really popular because they are obviously making a good job. You can see it also in their financials.
Yeah.
It's the same with you, but you are quite young compared to Bondora.
Yeah, it's just like the market is much more like difficult there with like the competition, because like most people, banks will like in Europe pretty much like if you have a stable income, if you have a pulse, then a bank will give you a credit card, a consumer loan, car loan, a second credit card, and so on. So it is obviously it's still possible to run a profitable business in Europe as well, but it's the impact is much smaller. So you're one provider out of like 100, whereas for us here we can still see that that 89% of our customers would not have a car without us because they can't get bank finance, and that's a huge impact that you can have on people's lives. Where you can't you've been around in Joburg, like there's no like sidewalks, there's no public transport to speak of. If you don't have a personal car, you can't move around.
No, you can walk if you want, but it's also not the best idea maybe.
Yeah, but I mean it's also like just like, people live so far away from their job.
It's a big city.
It's just impossible, right?
It's impossible.
Yeah.
So I also have a rental car to get around Johannesburg and so on. And honestly, it's hard not to damage the car due to bad streets or something else. And also, it's not the most safest city. Is this also something you're taking into account if you're choosing a customer, where he's living, and maybe also, if the car is damaged and so on?
So no, we don't discriminate based on like where somebody lives.
So if it's near to a slum, maybe it's more dangerous to have a car, maybe?
So I mean, the cars actually get stolen way more is like in a nicer neighborhood like this, but in like from parking lots.
No, really?
It's and then so let's say crime obviously is a problem, but basically like close to the like people like the criminals. And not everybody's a criminal, obviously, in a slum, but the criminals there will go out to, a fancy neighborhood to get like the cars and so on. So we don't discriminate based on where we live. Every car is comprehensively insured. So we have an insurance provider. So if the car is crashed, if somebody crashes into you and so on, the insurance company will pay for this. There's also a GPS tracker on every car, which is the norm on the market. Like pretty much every car has a GPS tracker. And we've seen also, cars do get stolen, but the GPS tracking company that we're working with is pretty much getting every single one of them back.
Okay.
And then if they're not getting it back, if it does get stolen, then the insurance company will pay for it. So it's kind of like we've taken this to kind of, it's like the cost of doing business. So we have a cost for the GPS tracking, we have the cost for comprehensive insurance, and but that's part of the rental payment that the customer makes.
Mm-hmm. So let's get back to Mintos right now. You are one of the loan originators who are not paying interest on late loans. Mm. So this would mean you are more attractive to the investors if you would pay interest on late loans. Do you think about to change this in the future? Or,
I mean, sure. I think it can be changed if the market standard, if the convention changes basically. But right now the convention really is there. It's like, so, I mean, let's put it like this. So we're not paying interest on late payments because we don't have to, right? So like it's ultimately you'll take to account all costs there. The interest that we pay, cashbacks, obviously Mintos has its fees and so on. And then that needs to be competitive in our financing mix.
Yeah. So
if we don't have to pay for like an extra fee, then we won't, right? So and then you can think about it the other way as well. If it becomes clear from the market behavior that people really value this late payment, getting extra interest for late payments, then sure we'll do that. We'll start paying late payments, but then possibly that will mean that the headline interest rate will also drop. So maybe okay, right now you get
so it's just a balance.
You get 15% interest, but you don't get any interest on late payments. Okay, but now you start getting interest on late payments, but the interest is not 15%. It's whatever 12% or something. Yeah, so it's all a balance. It's a marketplace. That's what Mintos is. It is a marketplace. So we keep testing with different parameters basically, just to see to get also very the most cost-effective way for us to grow.
Yeah. Okay. That makes sense. So let's maybe come to the end. I have a lot of more questions, but so I think it should be also interesting for the viewers. So the last question is, why should investors trust you, and why they should trust that you are still existing in let's say 5 or 6 years? Because we see already a lot, as we have spoken before, a lot of loan originator defaults. Mm-hmm. So, and we are now in a very difficult time, I would say, in the world economy. So why investors should trust Planet42?
Investors should look at our financial statements, and really the only thing that matters is cash. Well, not the only thing. Obviously, there's other nuances and stuff, but basically, what is the cash that the company is generating, and then compare that to what are the obligations. Mm-hmm. So for Planet42, our interest coverage is usually it's always over 3, sometimes close to 4, but let's keep it let's say 3. That means that the money that customers are paying us is sufficient to pay interests 3 times over. So there's a lot of margin there, and then for both paying higher interest and also seeing the portfolio deteriorate. And obviously, it's possible that the portfolio does deteriorate, especially in these current market conditions. I think for that I would just refer back to COVID. Obviously, there was the full lockdown in South Africa, way stricter than was anything in Europe for quite some time. So our portfolio also took somewhat of a beating, but it was still very robust. So we saw the worst month is that the revenue dropped 8%, and then it started increasing again. We offered quite a lot of payment relief for customers that we believed are just temporarily in trouble, and then will recover, and most of them actually did. But we also had at some point, it was nearly half of the portfolio was somewhat in delay. But even in that super stressed situation, we had more than enough cash to pay all of our investors. So the reason why we will be still around in 5 years is that our business model actually makes sense. There's a huge positive social impact on what we're doing here, just empowering people to just move around so they actually can get to get to their work, drop the kids to school and stuff like that. But it's not a charity. It actually makes commercial sense, business sense.
Yeah.
And then that's really all you need to know, I guess.
Yeah. So another question comes to my mind. Now I forgot the question. What was it? Ah, yes, the danger of regulatory changes. So I remember a time when I sat also, like we both together in Armenia with Varks from Mintos, and maybe you know the story. They were also super profitable, everything was fine, and then from one day to another, the government said, okay, you cannot issue loans anymore. So could this happen also in South Africa?
So not in that way. So South Africa already is heavily regulated for lending. So they can't really like. It could change, but it's like the regulation is already like tougher than it is in Europe. The model that we are using, the rental model, this isn't under the kind of the.
It's not a loan, right? So
it's not a loan, and the important bit is that also it's not only is it, it's not only just like it's not that it isn't a loan. It also doesn't function as a loan. So, for example, this being able to return the car at any time, that's a rental. That's a rental kind of contract feature, not a loan. You can't just for a loan you can't return the asset at any time if you want to. This model, which South Africa is called rent to buy. This has been around for decades. So in the 1980s, you were able to, since then you've been able to buy like a fridge with a rent to buy and so on. There's many car dealerships offering their own rent to buy. It's just like we're doing it different, and we're doing it in scale and with really strong data capabilities. So we actually have a scalable model, whereas like these car dealerships, they maybe have like 10, 20 cars that they've done with this rent to buy. And I think maybe just finally on that point, pretty much every debt and equity investor, larger one that has invested into Planet42, has commissioned a legal opinion from like various legal firms in South Africa, who basically every one of them have gotten to the same kind of like conclusion. Like, yeah, there's a very low risk of kind of this regulatory reclassification of or like rental contracts to anything else. So we see that risk is low.
This rent to buy, you said this is also, you have it also in other areas. You said you can also rent a fridge.
Yeah,
but in the end, this is still a loan, right? So it's just another name for a loan, but.
Well, it depends on what you see as the results. So like, okay, so if you compare like the Planet42 car subscription or this rent to buy contract with bank finance, right? So for the bank, first of all, you just pay the interest costs, but the bank has required, or it's compulsory to get comprehensive insurance to get GPS tracking on top of that. But that's not kind of, the bank doesn't provide that service, but makes it compulsory that you have it. Otherwise, you can't have the contract. So those costs are not included in the monthly payment. For us, the flat monthly payment is inclusive of this comprehensive insurance GPS tracking. And the most important thing there is like if you just don't want the car anymore, or if you can't afford it anymore, if you want to change the car, for the bank, you can't go to the bank, here's the car, here's the keys, goodbye.
Yeah, that's true.
With us, you can. So like that is the like fundamental difference there between rental and a regular loan. So we are taking the risk of liquidating the car, and then we are actually currently we are losing money on when the car gets returned, and we sell the car. Then we're losing money on that.
Yeah. So it's not good for you if they are.
Yeah. So we're incentivized to keep customers happy, so that they keep renting the car for as long as possible. Yeah. So we make money if the customer is happy, basically.
But sorry, there comes another question. But this rental contract, it's a fixed time, right? So we have But if you're investing on loans on Mintos, they are for us. It's a fixed loan, a fixed term.
Yeah, so we have to put like some kind of a term there. Like theoretically, I mean not theoretically, like the contract itself is termless. So we can, like, the customer can rent the car for as long as they.
That's an important information. So
they want. Yeah.
I wasn't aware before.
But yeah, we have to put it. And actually now, I think in Mintos, so there's with this like moving to this node structure.
Yes. Mm-hmm.
There's some regulatory differences, and now like so, currently the loans on the Planet42 contracts on the Mintos platform, I think they're up to 60 months, but.
You could change.
With actually, I think now with this note, and this is not finalized yet, and I'm actually like from the legal like intricacies there. I'm not dealing with that like directly, but as far as I understand, what the change will be that we have to use the average contract length, right? So that we have statistically what is the average contract for our customers, which is about 3 years. So in the future, we'll actually. I think we're going to use that on the node structure because that's what the portfolio average actually is. It isn't 60%. It isn't like 60 month contract. So the duration there will probably drop.
Okay. Yeah. Thanks for all the insights, Eerik. It's a super interesting business. So I'm curious to see how it will work in the future.
All right.
And hopefully,
thank you.
You will stay alive a long time. Not you, but your company. But you,
well, me as well. Hopefully, yeah. No, yeah. We're doing quite fine. Actually, I think that in this like new environment with this there's not recession yet, but clearly like markets are down, like and so on. It is much more difficult to raise money for everybody. But I think like we will actually gonna come out from this stronger because. Again, our business model actually makes sense. We are actually making money. This didn't really matter much in the previous years. It was just more like hype-based. Crazy companies, crazy ideas were able to raise money. That is much more difficult now. So investors are actually looking at okay, what is happening on these like with the financial statements, and then obviously for us again, cash is king. We're generating a lot of cash. This is a very good business model to have in this environment.
Yeah, it's a good approach. I heard it a lot of times from other successful CEOs, so I think you will do your way.
Thank you.
Thanks a lot.